All right, let's break it down. We're going to build a super fast 5-step pre-market checklist for the Indian market. I'm going to show you exactly what to look at every single morning before that opening bell rings. The goal? To take all that messy data and turn it into a clear, actionable trading plan. You ready? Let's dive in.
So, you know that feeling, right? It's just before 9:15 a.m., and the big question is, which way is the market headed today? Up? Down? It feels like a total guessing game. Well, we're not going to guess. We're going to use a simple, step-by-step, data-backed approach to figure it out.
Okay, step one. We've got to check the mood of the global markets. Think of it like this. Before our market wakes up, we need to see what kind of day the rest of the world had. What happened in the US overnight? How are things looking in Asia right now? This sets the stage for everything.
And right away, you can see it's a bit of a mixed bag, isn't it? The US and Europe, they closed in the green, pretty solid. But then you look over at Asia, and things are looking a little shaky. The big one to watch, US futures, are pointing slightly down. So what's the takeaway? There's no clear all systems go signal. The mood out there is cautious.
Now, after we've scanned the globe, we zoom right back into our first and maybe most important local signal, the GIF Nifty. Seriously, think of this as the trailer for the movie. It trades before our own market opens, and it gives us the first real clue about where the Nifty 50 might open. It's our first piece of hard data.
And what's it telling us this morning? A drop of 85 points. Wow, so that's not just a small dip, that's a pretty clear signal that we're likely looking at a gap-down open. This is a huge piece of the puzzle, and right now, it's pointing to a weak start for us.
All right, on to step two. Now we need to follow the money. I'm talking about the big players, the FIIs, foreign institutional investors. We track these guys because, let's be honest, they move the market. Their huge cash flows are what people call smart money, and you definitely want to know which way that money is flowing.
And look at this. Yesterday's data is pretty telling. The FIIs were net sellers in index futures. Okay, but they were also heavy net sellers in index options. When you see them selling in both, especially that much in options, it's a really strong bearish signal. They're not just cautious, they're actively betting on a downside.
So, let's put it simply. The smart money is bearish. Think about it. We had a negative signal from the GIF Nifty, and now we've got the big institutions betting on a drop. The pieces of evidence for a weak open are really starting to stack up.
Step 3. Time to dig into the options data. This is where we get to peek into the collective mind of the market, you know? It helps us measure the overall feeling out there. Is it fear? Is it greed? Is it confidence? Let's find out.
And the first thing we look at here is the India VIX. You've probably heard of it. It's basically the market's fear index. Super simple. If VIX is high, fear is high. If VIX is low, the market is feeling calm. It's a quick temperature check before we look at anything else. And that brings us to this number, 0.70. This is the put-call ratio, or PCR. It's a hugely powerful little indicator, and today it's sitting at 0.70. So the big question is, what is this number actually telling us?
So what is the PCR? It basically compares the number of bearish put options to bullish call options being traded. A number like 0.70 means way more calls are being bought than puts. Now, you'd think that's bullish, right? More people betting on the market going up. But in this case, a reading this low often signals that the sentiment might be a bit too one-sided. So it's actually interpreted as a cautious or even a bearish signal, which, interestingly, lines up with the other clues we've seen so far.
Okay, step 4. We've looked at the global mood, we've followed the smart money, we've checked the sentiment. Now it's time to look at the chart itself. This is the battlefield, and we need to know where the key lines of defense and attack are going to be today. And here it is, straight from the experts. We're looking at a major ceiling for the market today, right around that 25,550 to 25,600 zone. Think of this as a huge wall. For the bulls to have any chance, they've got to smash through this level and, more importantly, stay above it. So let's boil it all down to two key numbers for today. On the upside, we have that resistance wall between 25,550 and 25,600. And on the downside, the floor is at 25,300. This is the critical support level. If we break below that floor, watch out. Things could get ugly pretty fast.
And finally, step 5, putting it all together into your trading plan. We've gathered all the evidence, right? Global cues are meh, GIF Nifty is down, FIIs are selling, and options data is flashing warning signs. So, what do we do with all this information?
And here is the simple checklist you can use every single morning. It's a 5-step process. 1. Check the global cues. 2. Analyze the FII data. 3. Read the option sentiment. 4. Identify your key chart levels. And 5. Put it all together to form your view. For today, all signs are pointing towards a cautiously bearish stance.
So, with the market likely opening lower and a big wall of resistance right above it, the data seems to suggest a sell on any rally kind of day. But hey, that's just what the data says. The final call is always yours. So the real question is, knowing all this, what's your trading plan for today?